Hey everyone, welcome back to Corporate Decoder. Today, SIM Acquisition Corp, SIMAU just filed a Form 8, and this postponement of their shareholder meeting has some interesting implications for anyone watching this SPAC. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is all about pushing back a key shareholder vote, and it is telling us about the challenges SPACs face in finding a business to buy. So, what is the big deal here with SIM Acquisition Corp? They are a SPAC. That means they went public to raise money with the intention of buying another company, a business combination as they call it. But finding the right company and getting everything approved takes time, and sometimes, as in this case, they need more time than they initially planned. This report is about a postponement of a very important shareholder meeting. This meeting was supposed to happen on the 23rd of April 2026, but now it has been pushed back to May 1st, 2026. Why the delay? The main reason is they need to get shareholder approval to extend the deadline for them to find and complete a business combination. Originally, they had until the 11th of July 2026, but they want to push that back all the way to the 12th of July 2027. That is a pretty significant extension, giving them a whole extra year. This kind of extension is common for SPACs that are struggling to find a target company, or perhaps they found one, but the deal is taking longer than expected to get approved by regulators and shareholders. It is a way for them to avoid a forced liquidation, which happens if they can't find a deal by their original deadline. The shareholders will be voting on something called the Extension Amendment Proposal. Basically, they're asking the owners of the company to agree to give the management team more runway to get the deal done. Now, there is also a change to the deadline for shareholders. If you own shares or warrants in SIM Acquisition Corp, and you want to get your money back, meaning you want to redeem your investment, you now have until the 29th of April 2026 to do that. That is 2 days before the rescheduled meeting. This gives people who might not want to go along with the extension more time to decide. Now, let's look at the actual securities they have out there. This helps us understand what is at stake here for investors. The company has registered several types of securities. First, there are units, and each of these units is made up of one Class A ordinary share and half of a redeemable warrant. These are trading under the symbol SIMAU on the Nasdaq Stock Market LLC. Then you have the Class A ordinary shares themselves trading under SIMA. They also trade on Nasdaq. These are the main ownership stakes in the company. And finally, the warrants. These are SIMAU units. Each whole warrant gives the holder the right to buy one Class A ordinary share at a price of $11.5. These are also listed on Nasdaq. Warrants are essentially options that often come bundled with SPAC shares, and they can add a lot of potential dilution if exercised. The fact that they are asking for such a long extension and pushing back the meeting suggests that finding a suitable acquisition target is proving difficult. SPACs have to return money to shareholders if they don't complete a deal within a certain time frame, and that deadline is often a major source of pressure. This filing isn't about financials in terms of revenue or profit because at this stage, a SPAC doesn't have operating businesses. Its value is entirely tied to the cash it holds and the potential for a future merger. The market cap for SIMAU is around $248 million, which gives you an idea of the scale of the cash they've raised. The news headlines show that this isn't the first time they've had to push this meeting. There was another postponement back in April related to the same shareholder vote. This pattern of delays can be a cause for concern for investors, as it might indicate ongoing difficulties in reaching an agreement with a target company or securing the necessary approvals. When you see SPACs repeatedly extending their deadlines, it often means they are either struggling to find a good deal at a reasonable valuation, or the potential target company is hesitant about merging with a SPAC, especially in the current market environment. Many SPACs post-merger have seen their stock prices plummet, sometimes by 70 to 90% within a year. For example, some SPACs from the 2020 to 2021 boom have struggled significantly, with many trading well below their initial $10 offering price and some even facing delisting. This extension is SIMAU's attempt to avoid that fate. The filing also includes standard disclosures about potential participants in the solicitation of proxies and a disclaimer that this communication is not an offer to sell or a solicitation to buy securities. These are necessary legal protections. One interesting point is that SIMAU has elected to be an emerging growth company. This allows them to take advantage of relaxed reporting requirements for a period, which is common for companies going public through a SPAC. Looking at the bigger picture, the SPAC market went through a huge boom and has since cooled off significantly. Many SPACs that went public in recent years are now facing the challenge of finding a business before their deadlines expire. The extension suggests SIMAU is in this category. They are essentially betting that they will find a deal within the next year that will satisfy their shareholders and the market. The risk here is that if they don't find a suitable business, they will have to liquidate, and shareholders will get back their initial investment minus any redemption fees. But the real pain for investors usually comes from the value of the shares and warrants they hold, which can become worthless if the SPAC fails to merge, company performs poorly. The exercise price of $11.5 for the warrants is also a key level to watch. If the combined company's stock doesn't trade significantly above that, the warrants could expire worthless. What I'm actually looking for is evidence of progress in finding a merger partner. This extension is a necessary step, but it doesn't guarantee success. The real test will be whether they can announce a compelling deal that justifies the time and capital invested. Alright, that is my take. Stay decoded. If you appreciate getting straight insights from corporate documents, make sure you are subscribed, and the tools I use are linked in the description.